Good morning and welcome to the Stealth Trader pre-market analysis and trade plan setup for Friday, October the 17th, 2014. This is Doug McKay. I am the head moderator and director of trading here. If you want more information about our product sets, we do have our alert service in beta mode. It is going live in the next week or so. You can go and take a 30-day trial or do a 30-day trial on our software itself. You can send me an email at d.mckay@stealthtrader.com if you're interested in finding out more information, as well as our chat and live room will be moving over to the website itself in the next couple weeks. Okay, before we get going, I have to do the legals. This information for the purpose of educating members who want to expand the knowledge of business trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors can use more than initial investment. Nobody at Stealth Trader is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see are for education purposes only. Please trade your own plan and do your own due diligence. Okay, getting going. Let's take a quick look at the key numbers. I think it's important to take a look at the ranges. Obviously, in the last couple of days, we've had some expansion on range. We're back up trading in the 1870s, which is a very good thing. We're above the year open again, so the bulls are still in control. I'm not going to go through all the numbers. We had some really wide ranges in terms of the initial balance. You can see that, in these high volatility days that we've had, 22, 19, 15, 30, and 29, 75. I can guarantee you this is not a normal environment. Looking at how it affects our 20 days ATRs, I've been mentioning this, the fact that we've been getting these expansion on the 20-day ATRs, and that something was leading up to something. Well, obviously we can see what it led up to. But our average true range now for the last 20 days has expanded to 28 and a quarter for the RTH session, 32 on the full session, and almost 15 and a half. This is the largest I've seen it since going back to 2008. So we can, we have to look at not just what our normal expectations are, but expanding that up above us and below us. Of course, the volume, and this is very important to think about, is if you've been watching your dome, I've made comments several times in the last couple days that the dome is the thinnest I've seen it in a long time. I'm talking, sustained thinning of the dome. Usually, during the RTH session, you'll see, 1,000 plus orders pretty much all the way up and all the way down on the dome. And the last 4 days of trading, it has been sustained 3 digits, sometimes 2 digits. You would think that that would dry up the liquidity and that the volume would actually go down. This is the opposite, that they thin the dome out because the OTF has been involved and the HFT has taken over, and they're moving orders all over the place and they're ripping this thing. And you can take a look at the average rotation, the harmonic rotation right now in the 5 minute. It's over 10 points as an average rotation. So when I talk about the fact that the dome is thin and that the algos are in charge, that's what I'm talking about. When you see that the bid and the ask, 5 up and 5 down, have all thinned out to 3 digits, and even when it's lower than 500, like it's been most of the time in the last few days, it's dangerous to trade if you're using tight stops. And it's not that I don't think you can trade in that environment. What I'm saying is that it's extremely dangerous that you have to use wider stops, and you have to figure out if you're a normal, 1 or 2 lot trader that's going to trade with a 6 tick or an 8 tick stop, you're going to get stopped out more than you would expect, and it's dangerous. And I made a comment to a long-term member, yesterday, and he got offended by it, but I was worried about the fact that, he was even trading in this environment when I know what his account size is and what his risk, his max risk is. If you don't have a big risk right now, you shouldn't be in the market. I backed off. I've been trading a 1 lot I've got a new dome that I'm trading on right now, so I opened up an account with Stage 5, and so I'm not only trading a new product where I'll always be very careful, but I'm also, very cognizant of the fact that we have to be extremely light on trading in this environment and controlling our risk more than anything. Anyway, I'm done preaching, so let's just take a look at the news. Obviously, the main news is out, yellowly speaking, and the building permits and the Canadian core CPI and the housing starts have already gone off. The big one is going to be your University of Michigan consumer sentiment and inflation expectations. That's coming out at 8:55. Remember that this can come out early. This is a subscription, so you might see a reaction. Just be careful in that first half hour today. Not only that, remember that it is OPEX today, so the October options are expiring today. I haven't had a chance to go and take a look at the open interest. Nick and I are going to do that once we get off of this. I'll post it into the room. Very important to take a look at where we are in the trends. We've been talking about the fact that the overall monthly trend, the large time frame trend has not been violated. It is still very much intact. You can see we came down, almost got down to test the 20 SMA on the monthly, and then we bounced up, and we're currently trading 1873. That doesn't mean that we can't come down and test it again, but the point I was making the other day is even with this retracement, it's not quite 10%. This is still a uptrend that we're in. It hasn't been violated, and I've been of the mind that we are not done with the upper levels as of yet. On the weekly, very important to look at what our week is setting up as. Our week is setting up as a FUBAR, and we've got a FUBAR tech gap right now. It'll be interesting next week if we get a FUBAR tech gap Mr. Sneaky on the weekly. If that happens, I would be thinking that you could really start looking at this 1959, 1960 target. But again, this is a weekly pattern and not a daily pattern. Don't expect to see that to test this upper levels because we have an auction territory up there. Going down to the daily. On the daily, we are still in our downtrend on the daily, but we're coming up to close the gap. We talked about this technical gap yesterday. You've got a FUBAR, Mr. Sneaky, tech gap on the daily, and you can see how the reaction has been so far tonight. I wish I would have been trading last night because this move up overnight has been pretty good. But this is a classic pattern that you see in all the different time frames. You have to trade it within the time frame. You can see there's the volume spike. There's the FUBAR with the tail almost the size of the body. Then you've got your inside bar that we put in yesterday. And now we move up to close the gap. A gap close will take us up to this 1886 level or thereabouts. I think it's actually going to be more closer to 1884. Going over to the geometric chart, I put a new fork in, a downward sloping fork, just because of the energy point that it's got right here and how it's going to play out today. This is at the 1874-75. I'm really looking at the 1871.25 again. If you guys remember that number, that's been an important number for us in terms of if we broke below it, that moved down towards that 1850. If we can get above the lower line of this downward sloping fork and break back outside of this fork, then I'd be looking for a move up to close that tech gap on the daily at around 1884, but you could actually even anticipate a move up to the 1906 area, which is the center line of the downward sloping fork. And if you remember, that 1906.50 was my target once we broke below it was 1921 or 22, and we were targeting that 1906 because I didn't think that the 18 would hold, and sure enough, it didn't hold. And then we bounced off of that 1906 and then came back down and broke right through it and went down and hit our lower targets and our main magnet at 1850. Let's go and just take a look at the big picture first. Really got to keep this short. We're currently trading at 72.75. The 71.25 is going to be a very important level for us today. If we break below the 71.25, you want to look for a move down to this 1866. You can target the 1869.25 as your first scale. A little bit of support here at the 68.50. You can see where we, yesterday afternoon, we went up and we were really trading around that 1868, 1869 level before they rotated back down towards the close and closed near back at the 1850. I said that this 1850 wasn't going to let us out of its grasp very easily, and you can see we rotated around it. Now, I never expected to get the size of the rotation that we got around it, but it still acted as a major magnet because it is the most traded price going back to October 9, 2013. If we can hold above the 71.25, I'm looking for a rotation back up into the 3-day where we tried to hold balance and where we've had value in the past in this 1875 level. We still have a naked that's there, so disregard that. You can close there. 79 is a resistance. The big number above us right now is this 1887.75. This is a pretty thin part of the composite, so I'm expecting some rotations around here. You can look at the 79.75, but really the big number is that the key number we were trying, it was down here at the 1884.50, but with the move down, it shifted up to 1887. This is the key area. This is really the thin gap zone, the big rejection area, and I think it really determines whether or not we can finally leave this 1850 behind us. Until we get above that, we still have to be cognizant or be aware that we could come down and rotate into this 1850 area again. Now, this level right here at 1864.50 is going to be our key line in the sand below us. 71.25 is important on the open, but the real line in the sand for us on the ES today in terms of whether or not we get a bigger rotation down towards that 1850 is going to be this 1864.50. 1864.50 is the CLVN, but more importantly, it is the value area high of that whole distribution area around the 1850. So if we break back into the long-term value down here, then we're likely to get a move down towards the 1857.25, possibly back into this 1850. So 71 to get us a test to the 64.50, or possibly the 69 and 66 level. But if we break that 64 level, this would be a very good short to get into because you're going to get a move down. I think at least to test the value area high from the last 2 days at 60, but I really think that 58, 57 area is doable. And then, of course, if we get anywhere close to 53, I think then we get pulled back into the magnet. You can see that the 2-day balance coincides with the composite, the microcomposite VPOC. It's all in around that 1850, 1849 level. So let's take a look at our overnight and start moving our numbers and setting our levels up on the ES for the day. So you've got an overnight high right now at 78.75. These drawing tools are not working with me lately. Here we go. And then our overnight low is all the way down at that 1848. 48.75. And our current VPOC is at 74. It's not going to close. You can see that the overnight inventory is net long. So if we get a move down below that 64 level, we've got the value area right there at 63. So the 64.50 and 63 is going to be crucial because of the fact that if the longs get caught, in the hole, they're going to get squeezed, and they're probably going to run stops all the way down towards the VPOC from yesterday, at least, down to the 58, 57 level. So let me just put the VPOC in here, and then we'll set up our levels. Our VPOC is 74, so right above this, or just below the 74, 75. So get rid of this. Expand this out so you can see it. So, of course, the 71 and a quarter level is going to be my line in the sand for the open. And if we break that below, if we don't hold, we're opening up outside of range and outside of value. So we're above value and above range. So we have to watch for initiative buyers to step in, especially with the inventory being net long overnight, and then ripping up through to take out this naked VPOC and this naked close and go take out the overnight high. But if we get two-sided action on the open and we break the 71 and a quarter, you can get short. You got to make sure that you get funded and scaled before you get to the 69.75. Once we're below that 69.75, the first level of support is going to be the 64.50 to 63 area. And I'm going to use it as a slush area. I'm going to put it in here because, we're likely to come down and test this 64, but you don't want to get short until we're back inside of value and below that 63. And you don't want to, if you're going to take the reversal off of this, you don't want to get long until we're back above the 74.50. So just make sure you play that level very carefully and wait to make sure that they're holding above it, rejecting it. And the safer play would be to wait for them to reject the 64.50, come up and break back outside of the 69.75 and get long into the 71 and a quarter. Just remember, you have to get funded before that 71 and a quarter again. But likely, if they reject the value area and do a breakout of range, we're going to go up and take out that 74, 75. If they bounce off of 71 and you see those initiative buyers stepping in, you can get long off of that into the 74, 75 with the continuation to take out the overnight high. This 63 is going to be very important for us on the big picture, the intermediate picture, and the intraday picture, because if we break back inside of value, then they're going to squeeze those longs, and we're going to get a flush down towards that. And the first target that I would target inside of value and inside of range is going to be this 1859 area right here. You can even, front run it and take at 60, and then look for continuation towards the second target, which is going to be 57 and a quarter. And then the first area of support that you should look at is going to be this 53.50. I don't think the 53.50, if they get inside of value, is going to hold because it's too close to the 1850, and you've got the naked VPOC and the naked close with the overnight low all right there. And then once we're below that, the first level of support is going to be at the midpoint here at 46 and a quarter. And then below 46 and a quarter, then I think you get an 80% destination value area play down to this 1841 area again. Remember how we were talking about that 1841 before, and then if we break below that at 1841, then we've got some capitulation going on again. It's really 1840, so just move this down so it incorporates the 40, because we could come down to the 40 and test this LVN. Then the first destination below that is going to be the 1837 level, the value area low for the 2-day balance that we rotated around 1850. So that first level is going to be 1837. And then below that, I think we get a move down, and this is should be there. Below there, we've got this blunt area again that we keep just rotating through. We're not finding, we talked about yesterday, the fact that we probably get stuck in the wick here and rotate back and forth, which we did most of the day until we got that rally. And the targets below this are going to be, this is not the need, the targets below this are going to be the 1830 level, 1830 even, and then below that I'd be targeting the range low. Really, it's the 1820 I'm looking for. You could get a little bit of support at 2275. There's the value area low of that distribution zone around that 1850. So that is right at the range low, and then the target, the low range and below value is going to be 1820. Come on. $18.20, it's shifted up from 18. You can see that they rejected that 18, and actually is now a CLVN at 1775. So that's going to be first area of support below. And then anything below that, you've got 1810. And the big number is going to be that 1806. So beyond some of this. 1803.75, 1804. 1804. And I know I'm going big, in terms of my range here, but because of the ATR, we have to actually be thinking about these things. And then below there, you've got 1800, but it hasn't been holding, or I don't think it'll hold. So I think you really have to be targeting that 1792 area. And I'm not going to go into the reasons why, because I don't have time this morning, but that's my main target below the 1800 range. And then to the upside, if we hold above, we're getting a move up here right now, even before the open. We couldn't even put in an overnight high that's higher. Look for a move to take out the overnight high. I think, if you see initiative buyers stepping in, you might get a little bit of rotation down to take out the naked V-Pock and close on the open, and then rotate up through the overnight high. Targets above us right now is the 79.75. And then if we break above that 79.75, I think we've got a pretty easy move to test this low volume node all the way up to 87.75. And then I don't have to change my targets to the top. We've got that 93 area, this is not going to be a trade area, it's going to be a target now. 94 even, got naked VPOC and it's a CHVN. And then the level I'd be looking at is 1899. I don't think that the big one is going to be the 1900. And then above that, our first target is back up in that 1906.50 area and then 1914. And that's all I've really think. Just take a quick look at the Keltner. And we're not going to be able to do any of the other markets. I apologize. You can see that a move up to test the upper Keltner right now is going to bring us up into that 1880.75, which is basically in around that 79.80 area. And Keltner center line is 74, and the lower line is 69. That's going to be it. Sorry about the lateness in the short session. Market's opening in 1 minute. Be careful on the open. Remember, we've got University of Michigan sentiment, and we are on an OPEX. So be careful out there today. Trade well, trade safe, and we'll catch you on the flip side.